The countdown to the new year is on. 2018 has been an extremely volatile year across the markets and across the globe. Today I'm joined by Jim Rogers at the NASDAQ MarketSite. Many of you know Jim as the legendary investor, businessman, as well as author of Street Smarts. He will be talking about commodities, in particular gold and oil. Thank you so much for joining me today, Jim.
I'm delighted to be here, Remy. We can talk about anything you want.
Well, I do want to start out by looking at commodities, in particular gold. It has been quite a volatile market this year, not just for precious metals, but across the broader market as well. So starting out with the yellow metal, are you still looking at the $1,000 per ounce
Yes,
level?
if and when gold goes under 1,000, my plan is to buy a lot of gold. I haven't bought any serious gold since 2010. I own gold, haven't sold any gold, don't think I have sold any, but I still expect another opportunity to buy gold. And if it happens, Remy, I hope I'm smart enough to buy a lot of gold, or a lot more gold, I should say.
And it's really interesting, ever since I joined Sprott, I've been taking a look at the junior mining companies. We know that that model is very risky when it comes to discoveries. You've been in the commodity space for a long time. You even wrote the book Hot Commodities. So looking across all the commodities right now, where do you think the opportunities are?
Oh, let's see, agriculture, probably sugar. Sugar, believe it or not, is down something like 80% from its all-time high. Remy, there's not much in the world, in life, that's down 80% over the past 40 years, but sugar is. So probably sugar, but I'd have to look more closely at all of them.
And you always say buy low, sell high, as well as many people do. And you're right, when we look at sugar prices or even copper prices this year, they are down double-digit percentage points. But it's really interesting, palladium prices have been soaring this year and even hit a record high. So when we're looking at that space, I think it's always good to have some sort of strategy, given what's happening in car manufacturing technology. There's concern about palladium and its utility as well. But you take a look at the world as a whole when it comes to investing. So what's on the horizon?
Well, just like your parents taught you, buy low and sell high. Look around. China's down 60% from its all-time high. Japan's down 50%. I'm not buying Japan. I don't own Japan at the moment. But these are places where Russia is hated. I own Russian shares. I have Russian bonds. I own the currency. No, there are places that are down and down a lot. And if your mother was right, these are the places that you should be looking.
And we all know there's a lot of geopolitical risk, whether we're talking about the U.S. or Russia, India, as well as China. From a fundamental perspective, as we head into the new year, what do you think we need to watch out for?
Washington, D.C. I mean, that's where the greatest risks are right now, probably, the greatest uncertainty. First of all, we have a central bank which has no clue what it's been doing and probably not what it will do in the future. We certainly have an executive and legislative branch which has no clue about what they're doing. When things go wrong, they're going to make more mistakes. Be careful. Watch out for Washington, D.C. Watch out for everything, but especially Washington, D.C.
We know there are a lot of bumps ahead in the road, but I know that you've been referring to Zimbabwe as an opportunity. Can you enlighten us, Jim?
Boy, you've done your homework. Yes, Zimbabwe's a disaster. You know, a guy, I'll leave it at that, a man in 1980 took over and became a dictator pretty quickly thereafter and proceeded to ruin the country for the next 37 years. Absolutely ruined the country. Zimbabwe used to be one of the most successful countries in the British Commonwealth. Oh my gosh, he ruined it. But they threw him out last year. Probably I know things are going to change. They might get worse. But I would suspect that Zimbabwe is now an interesting place to look. You could also look at Ghana on the other side of Africa, but both of them are former British colonies.
And when it comes to investing in these areas, how exactly should investors who are curious about this go about their research?
Remy, if you can't find Zimbabwe on a map, if you don't know where Ghana is, please do not invest in either of those countries. Only invest in what you yourself know a lot about, I assure you. If you don't know that Ghana has a lot of cocoa and a lot of gold, please don't pay attention. If you don't know that Zimbabwe probably can't even spell it, I mean, not you, but if you can't even spell Zimbabwe, please don't invest there. It has enormous opportunities, huge mineral deposits, lots of agricultural and tourism in the future, but don't do it if you don't know what to do. They have a stock exchange. There are mutual funds. There are ways to invest, but only invest if you know what you're doing.
And Jim, it's been several years since you came out with the book Hot Commodities. So if you were to write another edition or new forward for that publication, what would you include?
I don't think, well, I would update it because it was published, as you point out, 8 or 9 years ago. But basically, the way the book was written, it was case studies. We talked about gold. We talked about things in there, commodities, and how they work. It was really more how they work. It was not a book of hot tips. It was a book of these are typical commodities, and that's how things work. So I guess all I would do is update it if I were going to do it again. I would point out that it's now several years later. Commodities went up a lot, down, and now it's probably the time to, not probably, it is the time to buy commodities again. I would say to you, and you write it down on Sprott TV, the commodities are going to do better than stocks in the future.
And I know recently you mentioned shorts for silver as well as gold prices. What are you seeing and what concerns you right now?
Well, what I said was that the short position in gold and silver was enormous. It was very, very high. I didn't say short gold and silver. I was just using that because typically, historically, when there's a huge short position in anything, it goes up. I was making the point that while I wasn't buying gold and silver, there is a huge short position, so you're probably going to have a nice rally. That nice rally has proceeded to occur. I'm still not buying, but I'm not selling. I'm waiting for a nice collapse in both.
And before I let you go for this episode, I do want to ask you about what we're seeing in oil prices. For WTI as well as Brent, we have been seeing double-digit percentage losses, but we have been also hearing about OPEC taking steps. But we all know how that always plays out.
Yep.
So what do you expect for oil in terms of spot prices as well as utility?
Well, I'm delighted to hear you say that about OPEC. I have learned not to pay too much attention to OPEC. I know you have to report what they say and what they do, and what they say they do, but I have learned not to pay too much attention to them if you're going to figure out the price of oil. Oil, I think oil's been down 10 days in a row, which is one of the few times in history that that's ever happened. So it's probably, you know, oil is making a complicated bottom. We're going to look back one day and say 2015, 16, 17, 18, 19, oil made its bottom, and then oil's going to go up again. The known reserves of oil are in decline and continue to decline except for fracking, but that bubble has popped, so be careful. Don't sell your oil.
Okay, Jim, well, great to get your perspective today on commodities, so thank you so much for joining me.
I am delighted.